Hey everybody, Jeff Garber, mortgage expert, bringing you some good news today on a market update. I know I've been doing more market updates than many people may want, but there's just been a lot going on over the last couple weeks, and today was no exception. Today we got the highly anticipated Consumer Price Index, CPI, which is a measurement of inflation. That number came out at 8:30 this morning, and it came in cooler or better than expected. What does that mean? Well, it means that maybe we're starting to peak at inflation. Might be a little too early to say that with authority, but at least in the July reading, which, it's August now, so we're getting the July reading now in August. And that was the first time in a long time that the numbers were flat, which ultimately brought overall inflation down a bit because of the 12-month average that we do, meaning we're replacing July's number last year with July's number this year, and that's going to bring the average down. So inflation year over year, last month was 9.1%, which we all know is really high. All right, we really need inflation to be around 2%. Well, it came down to about 8.5, and that was good. The markets weren't expecting that much of an improvement, and therefore we're in rally mode. Good day for stocks, good day for the bond market, and inside the bond market is where mortgage rates come from. All right, 30-year fixed rates live in the bond market. They trade every day. I'm going to show you that. I'm going to get myself out of the way, give you a quick update on where we're at, and hopefully we'll end on some good news here. So what you're looking at is the bond market, more specifically mortgage bonds or mortgage-backed securities that trade in the bond market Monday through Friday from 8 to about 4 or 4:30. And all you need to know is green is a good day, red is a bad day. And what we're looking for is big green candlesticks and prices to go up, because as price goes up, rate comes down. If you come back to June 13th here, that looked to be the peak so far in mortgage rates, as far as them being at their highest points. If I draw a line and extrapolate it out here, you can clearly see that from our June 13th low in the bond market or high in mortgage rates, we're all the way up here now. So rates have improved a nice amount. And you can see today alone, we have a nice big green candlestick, and that's because the inflation numbers came out better than expected. Now, look, are we out of the woods with inflation? Absolutely not. Is 8.5 a really high number? Absolutely. But the markets are looking for improvement. The markets are looking for the Fed hikes that have been happening to trickle and work their way through the markets to help slow the economy down and slow inflation down. And for the first time in a long time, we got a reading that we like, and we're heading in the right direction here, and that is helping mortgage rates. So you should definitely be jumping off the sidelines if you're considering buying. Now is a good time to get pre-approved. We've seen rates, I guess, were at a high of somewhere in the low sixes that are now in the low to mid fives. So that's a nice improvement. We want to keep an eye on that. We want to keep an eye on the other inflation readings that come out in August, because remember, there's two inflation readings that we have in our country. One is the CPI, Consumer Price Index, which came out today. The other is called the PCE, or Personal Consumption Expenditure. That comes out August 27th. All right, we look at both of them to get an idea on what inflation's doing, as well as the other economic reports that come out that I've been making videos on, i.e. every 6 weeks the Fed meets. We want to break down their Fed policy decision on what they're doing with short-term interest rates. We have jobs reports that come out once a month, the first Friday of every month. They're big market movers. We put all these reports together, plus the technicals that we see, which is the charts that are behind me on my screen. It gives us kind of our own little crystal ball. And with our crystal ball, that can tell us when to float or lock our clients in, because we don't always have to lock rate the day you get under agreement. If the market's improving, and we can see that every day, we're going to watch and look and see if we can catch and get you the best rate at the best time. On the opposite hand, if we don't like what we're seeing and the market's selling off, the bonds are going down and rate is going up, well, then I'm going to want to grab your rate before any further damage can happen. And so I think this is very important information if you're interested in understanding, how rates work and when to lock and when to float. This is where it all comes from. It comes from the bond market, and what it's called. Looking at these charts is called technical analysis. And then we have news. All right, we have economic reports that come out every day, a few times a week, and the news is always going to trump any technicals that we have, meaning bad news or good news can come in and wipe out whatever we're looking at on here and change the direction of the market. We need to keep our finger on the pulse with that. That's something I do every day. As you can see, if you look back, I have a YouTube page called the it's www.mortgageinstructionmanual.com. I made that because mortgages don't come with instructions. So please click on the link either below or in this video and subscribe to my page. I put a lot of information out on interest rates and terminology in the mortgage industry, different strategies in the mortgage industry, how to win your offer in a market like we're in, what adjustable rate mortgages are and how they work, what are points, any questions that I get, I make a video on because I want to make sure everybody gets information that may not be readily available or could be very confusing. I like to try and break it down and keep it simple. So good news so far. Got good numbers, good inflation number today. Let's see what happens. We're going to keep an eye on this. If things change, I'll probably make a market update before. If not, I will wait for the next economic indicator to come out and I will break it all down for you. I hope you're enjoying these videos. Again, give me a like, give me some comments if you can. Ask me any questions, be happy to answer them. And if you are thinking about buying, ignore the media. All right, it's always a good time to buy. All right, remember, marry the house, date the rate. Meaning if you're looking for your long-term house and you find it now and it makes sense, go ahead and get it because mortgage rates are going to change and you're not going to be locked in for 30 years where rates are today. We see the next refi boom coming, could be anywhere from 12 to 24 months, maybe sooner. But, that's what happens. Rates rise, they come back down. We get a refi boom. We see it over and over again. Just remember, you're not going to have the mortgage you get today forever. And hope that helps. And I will catch up with you soon. Have a good one.